Hello, welcome to the Pivotability Show. Today we've got Brad Rice on. He is the founder of HomePy and AmeriFund Home Loans. He's going to talk to us all about mortgage, his trajectory in the real estate space, and what that's been like for the past, I think, over 20 years?
30 years.
30 years, man. Yeah, so take it away, Brad. Let us in.
Awesome. Well, hey, thanks for having me. I was excited to get together with you here this morning. Yeah, look, I've got two main kind of focuses in my life on the business side. It is my mortgage company. I've been in mortgage for more than 30 years, and my real estate tech company, which is kind of the intersection between technology and real estate. And so, yeah, I'm happy to talk about that too. Really, my journey started right out of college. I knew I wanted to do something in real estate, but really had no idea like what in real estate. Did I want to be a real estate agent? Did I want to be a contractor? Like, I really didn't know.
How old were you when you got out of college?
Shoot, that's a good question. I guess I was 22 or 23.
How did you know you wanted to get in the real estate space? Like, maybe things were different then, but like now, real estate is just like an afterthought for most people I know that are my age.
Yeah, that's a good question because I had some experience. My father was an architect and a general contractor and a developer. So I'd always seen these giant projects he had done. He built, big buildings and skyscrapers and, all sorts of things, medical buildings. And so I'd always been like on job sites with him, walking job sites, wearing a little kid wearing my hard hat and that sort of thing. And I was like, this is so cool, from concept, literally seeing the drawings in his office, the sketches and the blueprints to having something built that you created from nothing. That always had an interest for me. But my real passion for where I ended up, I think, was around the time when I was going to college.
Hmm.
And I declared my major as finance because I was always good with numbers.
Hmm.
There was a minor that they did that was in real estate, and it allowed me to basically take all the courses necessary to get my real estate license.
Oh, that's
To get my broker's license too, not just my real estate sales license. And so this is in California. In California, you've got kind of two different licenses. There's a salesperson's license that you have to connect with a broker, and then you got the broker where you can own companies and so forth. But I still hadn't known what I really wanted to do. There were some big real estate companies that had grown during that period of time in my backyard. There was, one in particular that popped up on basically every corner. And then there was an event put on at a local college that had, it was a real estate event, and it had, it had Arnold Schwarzenegger. It had the owner of this real estate company that had grown enormously.
Was Arnold already the governor? No, that's recent. Never
No,
mind.
it was way before.
Yeah.
It was way before that. It basically, it had, three kind of key leaders, visible subjects that were speaking there. And what I learned from that was it didn't matter where you earned your money. If you made a lot of it, it ended up in real estate.
Hmm.
And so I was like, shoot, I'll just cut out the middleman. Let me just get into real estate.
Yeah.
So I was graduating college. I was getting married and buying my first house all at the very same time.
Nice.
And when I was getting the loan for the house that I was buying, the person sitting across the table taking my loan application, doing all that, I was like, this is pretty cool. And so I started talking to her about it. And I asked if I could follow her around for a day. And she said yes. And I did. And I was like, this is what I want to do.
Okay.
So I got into mortgage. And when I got into mortgage, I didn't know exactly what I was doing. I needed a mentor to tell me this is what to do. And I was lucky enough to land at a company that had a sales manager, and that sales manager basically took me under his wing and said, here's what you need to do. And I was young and I didn't know anything, and I was like, all right, I'll just do that. And so that's what I did. He said, do this, and I did it. And I didn't question it. I didn't ask him why. I just said, okay, I'll do it. And so one of the things that he had said to do was, you need to start getting everybody that knows you by name or by face into a CRM, a customer relationship database management.
What were CRMs like at that
DOS
point?
based. Do you know what
What?
DOS is?
No.
Oh, so before Windows came out, So
Okay.
this is before Windows, and you had kind of this
I didn't know Windows was
GUI or
that new.
application.
I thought Windows was a little older.
Well, Windows, I think 3.1 that came out might have been shortly thereafter. This was in 1993, and so a lot of programs were still DOS based, and Windows had maybe just come out, but it didn't have a lot of applications.
Okay.
And so this was a CRM called Telemagic, and you could look it up. And the guy who invented that, still living, he's actually in San Diego. I connected with him last year.
Oh, wow.
And he's known as the godfather of CRMs. But that was his program. And it was an auto dialer. So it was called Telemagic because he used a telephone to connect to your telephone and could call your database from it. And it was DOS based. So DOS is just basically like fields. You just look at fields on the screen.
So
And
basically
that's
like
it.
a spreadsheet.
It's better than a spreadsheet, but
Okay.
it's not appealing. The visual isn't appealing.
Okay.
Anyway, that's what I did. I bought the installation discs, so it was even before the CDs.
Oh, I remember those. Yeah, those were cool. I like to play with the little things that would slide back and forth.
You had to put the first one in, and then put the second one, and then the third one as you're installing it. Anyway, we're going way back. So, but I just started entering everybody I knew in it. Everybody I knew in high school, everybody from my parents' phone book that knew me growing up, all that sort of thing.
Were
We
you
really didn't
calling
use.
them or were you just building this database?
I was just building it.
Okay.
And so I took probably at least a month and a half and just spent hours every single day gathering the info. I would call people and get their physical address from them because we really didn't use email back then. And so it was really about getting their name and their phone number and their physical address. And a lot of people only had home numbers. They didn't even have a cell phone number. So over the years, obviously, they had to be enhanced. But then I just started sending out mailers to them. Today, literally, my database is about 15,000 either past customers or people that know me, and I still send out a postcard every other month to it, even though I don't originate loans anymore. But those people that know me and have used me for all these years, there's not a day that goes by that I don't get contacted by them and I give them to my loan officers. It really was about building that database of people because the beauty about the mortgage business is anybody's a customer, right?
Right.
And so like you could be, you even if you don't own a home today, you could be a first-time home buyer. If you own a home, you could refinance. You could buy your next home. Everybody is a candidate. It's not like being, selling medical devices where you're only going to go to hospitals and find a buyer there. And so it didn't matter where you were. You should talk about what you do. And so whether you're at a restaurant or, you're dry cleaners or wherever it is, talk about what you do because they're a potential customer.
Yeah.
So anyway, that's what I did. And there were many other things behind that about sending out for, different types of loans, and I would get bulk mail and doing that sort of thing. But I became a top producer in a very short period of time. Over the course of the first 6 years I was in the business, I started funding about 40 to 50 loans a month, and I had a team of 5 people that I had hired and built a conveyor belt to kind of keep me focused on selling and keep them focused on closing. And that led me to starting a company in 1999 that I grew into a national company. We did wholesale, retail, direct-to-consumer, everything about mortgage. We even wrote our own product. But we fell victim to what many did in the crash of 2007, 2008. And that was a big reset for me.
Yeah.
I was in the process of selling that company when the crash hit, and so that was a big change. It was a lot of years that I poured into that I didn't reap the exit benefit from.
Yeah, I wanted to ask, how did you grow it to so many segments? Was it one thing at a time or like
No, not at all. It really was, I was a big risk taker in my 20s and 30s. And part of that might have been ignorance. I don't know. But when you're young, you should take risks.
Yeah.
And so even though I had bought my first house and started a family, still, I didn't have huge overhead. And it was a period of time in my life where I really I wanted to retire by the time I was 40. That was my goal. I never got there, but I was close because at 38, I had bids for my company. I'm talking about in the 8 figures. It just didn't happen, is what it is. So it was a big life reset, but I just did everything at once. I hired people that knew segments of the business, and they taught me it, and that's how it happened. And so
you
wanted
weren't
to do
afraid to
wholesale.
hire. You weren't afraid to invest in other people who
Yeah,
I feel like a lot of
100%.
startup business owners, they're scared, or at least that's been my experience in like my circle. They're scared of hiring out or getting the wrong help or people taking advantage of them, stealing an idea, etc.
Yeah, it's all about execution. You should never be scared of an idea, about somebody stealing an idea. Everybody's had, I mean, no idea is novel. We've all had the same ideas. It's
Okay.
about the execution of it. And so, yeah, I would just hire people that knew way more than I did about certain subjects, and I wound up, honestly, I wound up paying them way more than I was making.
Mm-hmm.
Their salaries were way bigger than what I was bringing home,
Mm-hmm.
but they brought knowledge. And ultimately, most of the time, once I learned what they were doing, I could do it way better than them. Like they weren't even that good at it, is what I learned but I acquired the knowledge, so it was worth the expense.
Yeah.
And so that's how I did it. It was really doing everything at once. You can't build a company that size in a short period of time without taking that kind of risk and bringing people aboard to help you. So that's what I did. But yeah, fast forward, was on forced retirement for a few years, then ultimately got back in the mortgage business. I have another company. It's called AmeriFund Home Loans, and we're in 32 states, still growing. It's been a rough market the last couple of years for anybody in real estate, especially in mortgage with where rates are and the volume being so low. But we're in a good position as things will begin to transition, hopefully shortly here, to
What
take
does
advantage of
AmeriFund
that.
do?
So we do primarily residential,
Mm-hmm.
1 to 4 family, purchase and refinance, FHA, VA. We also do jumbo loans that go above the Fannie Mae and Freddie Mac limits.
What is that?
So Fannie Mae and Freddie Mac are two of the biggest purchasers of mortgages in the secondary market. And so a lot of loans are drawn based on their guidelines. They say, here's what we're looking for, these credit scores, these down payments, et cetera, this type of qualifying based on income verification, et cetera. You've got FHA and VA that have different criteria, VA being you've got to be a veteran, active or discharged honorably, but they have different guidelines associated with them. Once you get beyond their maximum loan amounts, it's called jumbo. And those jumbo loans, all that really means is they're not backed by Fannie, Freddie, Jenny, any of these other government-sponsored entities, and they take those on. And
Okay.
so the jumbo loans above, now the limits are very high, but let's just use, for example, 1.2 million. Those are called jumbo. And we do a little bit of commercial too. We just brought on a guy who does commercial loans, who's managing that division. We also are really big on reverse mortgages. And
What is a reverse mortgage?
so a reverse mortgage is designed for seniors. And so many seniors, especially baby boomers that are turning 62 at the rate of 10,000 people a day, they have spent a lot of years paying their mortgage and building up their equity.
Mm-hmm.
They sit on a lot of equity. A lot of them own their properties free and clear or owe very, very little on them.
Mm-hmm.
That may be the only asset they have. And they retire and they may only have Social Security. And so they live hand to mouth, but they're sitting on all this equity.
Okay.
And maybe their family's helping them, maybe their kids are helping them. But the reality is, rather than keep that property just as an inheritance tool, you may need to have access to that capital, not only to support you living, but if something happens, medical, long-term care, things of that nature. And so a reverse mortgage gives you the ability to qualify for that loan, not based on your income and ability to pay that loan back, but based on the equity and your age. And then the actuary tables say what percentage of your value you can take out on that loan. So let's just use 50% as an example. So if you have a home that's worth $1 million, you can access 500,000 of that. Pay off an existing loan that's on there, take cash out, or have an equity line of credit that's set up that you can borrow as needed, but you never have to make a mortgage payment on that. So your payments that you would normally make, that interest that accumulates every month, gets added to your loan amount. And so let's just say, for example, you had $1 million property, you do a loan for $500,000 on a reverse mortgage. Maybe you only owed $100,000, so you have $400,000. Use that money invest it, build a stream of income that helps you make your payments every month, put some aside for medical and health reasons and all that sort of thing. And then you don't make a payment. All you have to do is make sure you're making your insurance payments and your taxes, maintain the property, never make a mortgage payment. That interest that accumulates just gets added every month to your mortgage balance. So maybe in 20 years, instead of owing $500,000, you owe $780,000. It doesn't matter, even if your property loses value. So if it goes from $1 million and let's say there's a crash and now it's only worth $700, but you owe $780, the way that they're designed is the insurance that's tied to the loan picks up that excess so that the heirs never owe anything on that property. If there's equity when the borrower passes away, that still goes to the heirs. So it's a win-win.
How does this benefit the bank?
Well, they're insured, so they're earning the interest on that loan.
Okay.
They're earning that interest, and then if there is a situation where it's upside down, the insurance kicks in and makes them whole.
So you're not making a mortgage payment, but you're making an interest payment.
But it's added to the mortgage. You don't actually make that payment. It just increases your mortgage balance. Yeah. So it's a really great financial tool, and frankly, more people need to know about this because let's just say, for example, that your parents are getting older, they need some help. You're not in a position to really help them, but they're sitting on all this equity.
Yeah.
And you're like, I don't need to inherit your property. That's not, I'm doing well and I'm building my own wealth. I don't need that as an inheritance. What we need is we need you to live a good life in your golden years. It's a great mortgage for that type of scenario.
Do they have to be living in the property?
Yes. Owner occupied, need to live there at least 181 days out of the year. So if they have other residents, that's fine, but it needs to be their primary residence.
Okay. So they can't use the equity of like a rental property?
No.
Okay.
It's not designed for that. So anyway, we have a mortgage division, a reverse mortgage division. It's called Reverse Loan Solutions. That's all these people do. They really know it. There's very few lenders that offer these mortgages. Banks and credit unions don't. And so that's a really great part of our mortgage company that we're super proud of.
Yeah, that's awesome.
And then the rest of my time is really spent on my tech startup, HomePy.
HomePy.
Yeah.
All right. So, okay, I have been hearing your podcast, and I want to touch on that too. And you have commercials for HomePy. I had a deal come across that I could potentially do like some seller financing, and then I was thinking, well, I don't know if I'm going to have like money to buy this in 3 to 5 years, but I could help them save all of these commission costs by using HomePy.
That's right.
And so tell us about HomePy. How does it work? Like, walk me through it. I know nothing about this. How would I even start? Because I think the question is who decides the pricing, and how am I going to make sure that I'm crossing all my T's and dotting all my I's?
Yep, for sure. Okay, so let me start with, this was an idea I developed out of the way that I ran my mortgage business. So my mortgage business was primarily consumer direct, and when you have a business that's based on that, the mortgage originator many times has opportunity to help people that have a transaction where they don't have a real estate agent. So for sale by owner has been around a long time. It's a big part of the real estate market, being that it's relatively about 10% of the overall market in any given year. Okay. And so that's a pretty big market of people who understand the value proposition of selling their own home and saving the commissions. What I found was most of these people that were doing it really are they've been in the business or retired real estate agents, or they are in some ancillary business like escrow or title.
Yeah.
Or they had somebody in their family that was. And so those are the people that kind of help them through the process and give them the confidence to do it on their own. Or you have your mortgage guy, your mortgage gal that knows what to do from start to finish, and they kind of guide you through the whole thing. But I felt like there was a big gap there, and that the average person that is already doing things on their own, meaning they're selling things on Facebook Marketplace, or they use Auto Trader to sell their own car, or they use TurboTax to file their own tax returns. That's a person that values their money more than their time. There's always going to be people that value their time more than money, and they're always going to use the services of a travel agent or things like that.
Yeah.
The vast majority of people, however, would love to have a savings and are willing to do DIY. And so it always kind of bugged me that there wasn't a good process and system to guide people through selling their own home. It's not difficult. Look, you could become a real estate agent in 6 weeks. It doesn't take much. There's not a lot of study. You don't have to be a college graduate. It's a relatively easy test after a couple of courses, and just about anybody can be one. Like, the bar is very low.
When you put it like that, it's like, oh yeah, I guess I could. But before you say that sentence, I'm just like, how would I even go about? Like, I would just be so nervous to take on a task that big, right? To sell
Well,
my home.
and the reason I brought up that it's easy to be a real estate agent is that a lot of people would go get their real estate license to sell their own home because they wanted to learn the process and go through the training. Well, the reality is you don't really need to do that. And so if you wanted to sell your home and you're like, gosh, it's going to cost me $60,000 in commissions to sell my home. I only have $190,000 of equity. I could really use that 60 grand to buy my next house or to fund my next project or whatever it is. I would do this work. Where would you start? Like, how would you get this started? And so what I did is I created a marketplace that's a platform, kind of like Redfin or Zillow or Realtor.com. Has all that same functionality where you can go on, you can look at homes, you can save them, you can search, you can share them. But the big difference is all the homes that are listed on HomePy are for sale by owner. And so the homeowner that wants to sell their property can jump on HomePy and within minutes create a listing. So have you ever sold something using Facebook Marketplace?
I'm sorry, could you repeat that?
Have you ever sold something using Facebook Marketplace?
Yeah.
Or OfferUp or one of those? So very similar process. We bring in some public data to help you complete the listing, but basically like bedroom, bathroom, and square footage, and APN number, and then you can mark like what kind of roof it has, and that sort of thing. You can take your own pictures, which we actually recommend you get professional photos, but you can take your own pictures and upload them. You can decide what order you want them to be in and so forth, and you can create a listing, and we'll help you guide you through the value of your property. Most people know what their homes are worth and what they want to get for them. Okay. And they can get that data by going to a lot of those different sites. So we help them with that process, and they decide how much they want to sell it for.
Yeah.
So they create a listing.
You guide them, but at the end, like,
it's them doing it.
Yeah.
They're just using, so think of it as like TurboTax breaks down into very small segments, questions you have an answer to, and then it changes the next question.
Yeah.
At the end of the day, you might answer 40 questions, and then the system has compiled a very complicated tax return that there's no way you would have tackled without going through those just small questions and bite size. We kind of did the same thing to create your listing, but we also did the same thing on the buy side. So a buyer can come in, so you could go in, find a property you like, and we have an offer tool that allows you to go in and create an offer, again, in that step-by-step format. How much are you looking to write an offer? Are you getting a loan or are you paying all cash? If you're getting a loan, what's your down payment?
Yeah.
Do you want a loan contingency? This is what it is. Do you want an appraisal contingency? This is what it is. Do you want an inspection contingency? This is what it is. So all those things that go into creating an offer are digitized, and they get sent in real time directly to the seller. Now, we do have the ability also on the buy side, if you want to have an agent, if you already have an agent you're working with, they can go in and register and guide you through the process, and you just sign the document. So we are very buyer agent friendly.
Okay.
But it's really designed to service sellers that want to sell their own home and save on commissions.
Okay. So usually it's the sellers who are also paying for the buyer's agent. If the buyer has an agent, do they still have to pay out those commissions?
So that market has completely changed. The rules have changed. The laws have changed. Up until the end of last year, there was these giant lawsuits, class action lawsuits, that ended in judgments that were astronomical, with treble damages to $5 billion. And it was just the tip of the iceberg, because That was only in one state. And brokerages went in, and the National Association of Realtors went in, and they started settling these lawsuits. Those settlements led to changes in real estate that now have created a situation where sellers don't pay the buyers out of the commission that they agree, the commission agreement for the listing agent. So traditionally, for years and years and years, the listing agreement would state that the seller's paying X amount of commission, but if a buyer's agent comes in, they get half of it, for example. That no longer exists. They're no longer commingled. And so the seller would hire an agent and just agree to pay their fee, and a buyer now has to hire an agent directly and agree to pay their fee. Now, they can ask the seller to help them with that, but that's all done in the offer and the negotiation.
Okay.
The reality is they're contracting directly with the buyer's agent and agreeing to pay whether or not the seller helps them.
Okay, so with this change, the seller could potentially avoid commissions completely, even if the buyer has an agent.
Yep, they could do that. Or what we recommend is seller, take a look at the actual offer. If your best offer is somebody that has an agent representing them, and even though they're asking you to pay for those commissions, but their offer is higher than the others and it basically compensates you for paying that commission, then accept it. It may be an easier transaction. You'll have a less nervous buyer.
Yeah.
And so it really is about negotiating within your offer price to ask for any credits you want, just like you would for closing cost credit for the loan.
Okay, so as far as like negotiations go, for example, if both parties are unrepresented, it's just,
Peer to peer.
okay,
And then we help them with the paperwork all the way through.
okay. Is this help, like, do you guys have like someone you can call, or is it, okay,
Yeah, so not your typical tech firm where you can't reach anybody.
okay,
We understand this is a big transaction, and so we have customer service, transaction coordinators. We have people available to help guide them or answer questions and help them
Okay.
through the process. So it's really a la carte, the level of service that you feel you need, you can have, or if you feel you're experienced enough, you want to handle it all yourself, just using our tools, you can do that as well.
wow, I like this. Is this available in all 50 states?
So the full product itself is available in California and Florida.
Okay,
And we are open in all states, but we don't have the full product there yet. The plan is to get there this year. We're doing some fundraising to expand.
what does that mean?
Well, the full product allows you to get on the MLS, which then syndicates your property. So our listings that get on the MLS, they show up on all the major sites. So you're going to find those on Zillow and on homes.com, and you're going to find it on realtor.com and all of that. In the states that we don't have the full product, we don't have that syndication yet.
Okay, how are you getting for sale by owner sellers on your platform?
Well, today it really is about reaching out to the people that have already made the decision to sell on their own, and then
Okay.
showing them that we have a platform and tools that'll make it really easy for them to facilitate. Tomorrow or future or later this year after our current fundraise, we're going to start doing a lot more promoting and marketing, and you'll see us on connected TV and radio and
Okay,
Facebook and all that sort of thing in the socials. So we're, like I said, we're just fundraising now for the expansion. We feel like really everything is converged where 25 really looks like the year where we could break out, and real estate goes through a change which is needed because it's been depressed for a couple of years. And with the regulatory tailwinds we have now, I think we're in a great position to really show people that there is an alternative, because people are hungry for that.
Oh, yeah.
Especially youth
Yeah.
is used to doing everything right from their phone. And so this is a very similar kind of feeling to being able to guide yourself through something and not have to feel like you've got to connect with somebody that you may not want to connect with.
yeah. On average, how much have your customers saved in commissions from using HomePy?
Yeah, it's a wide range. Obviously, it depends on property values and so forth, but typically people will save somewhere between $20,000 to $30,000
That's great.
on their
That's
sale.
great.
Yeah.
So, this idea came up, and you were like, "This is a gap in the market. Let's do it." How do you go from idea to finished product? Like, what
Quickly.
steps did you take?
So to be clear, I'm not I'm not a techie. I don't write code. I don't have that experience, but I know the process of developing software because I had done that for my large mortgage company. We built software that we ran on, and so I knew that whole process. So it really was a matter of I sat down, kind of had the idea, sat down with my team, and we bullet pointed all the features that we thought would be good to have. This is after interviewing people. So we interviewed a bunch of people on what they thought they needed, what the market was missing, and so forth.
Okay.
We put that together, and then we started to wireframe it, meaning that it's like, okay, so somebody goes, they start here. Think of it as like a game where you go, okay, you go up here, and then depending on this answer, you might have to go over this way or go over this way. And so we created this wireframe, and then we sat down with developers and explained it to them and said, this is what we want as what we call our MVP, which is our minimum viable product we would launch with to test it.
Okay.
So the entire product, we knew what we wanted it to look like, but we needed this much of it to test the market.
Yeah.
And so they helped us to build that.
Okay, so you had this idea, you interviewed people, you talked to your team, you interviewed people, and then you built a framework of what you wanted. How did you hire developers?
We just interviewed a bunch, got referrals, went online, looked around, ultimately hired a company that I felt was very aligned. The owners of this development company were real estate investors, and their team weren't even homeowners. They were just young people. And so I thought this is the perfect combination because it needs to be dummied down to the point where they understand it.
Yeah.
And that's the way it'll be drawn. And then they happen to have built some really great apps like Snapchat, and they built the Walmart app and some other things. And so they had a lot of good experience. And so that's how I made that decision.
Okay. And what were your expectations going into this, like, creating this platform and you're hoping to reach certain goals?
Yeah, ultimately, I think this is one of those big disruptive enterprises. So, every now and then there's a large industry that needs disruption because things are broken. And, we've seen it time and again. Obviously, Airbnb existed because there was a need out there. Uber/Lyft exists because there was a need. Travelocity and there was a need. And they were disruptive type ideas that, honestly, there's a few of these that were around for a long time before time converged with the need and what they developed. And so I knew it might be a longer horizon, but at some point, there will be a large segment of society that will want to, and it will be easy for them to buy and sell their own home using technology. And guess what? Now with AI, we started bringing AI into the platform.
Okay.
It is easier than ever. So I feel like we really put ourselves in a good position by starting 4 years ago and seeing that this is the future of real estate.
Yeah.
And now having that experience under our belt, making changes, pivoting, adding to our product, subtracting from the product, seeing what people really need, getting their feedback.
Yeah.
Now we've got regulatory tailwinds. We've got AI to help us in development, and we have this disruption of real estate that is causing people to look for alternatives and a hungry media to expose those at no cost. So I think it's all right there in alignment for us to be that platform that ultimately people go, okay, well, hey, you can go buy a house, you can go use a real estate agent, or sell your house, use a real estate agent, but if you want to do it on your own, there's a site called HomePy. You can go to that site.
Okay, wow. Okay. So in hearing you talk, I think the things that I'm picking up that I'm really excited about is you love taking risk, which I think is like super cool. You're really good at teaching. So everything you've explained so far has made sense, except for the reverse mortgage. I feel like that's a really complicated topic. So is this, I know that you're really close to your kids because like I met you with Devin, right? And I follow him on social media. I see that you guys are at the gym often, all the time, and I think that's so precious. Talk a little bit about your relationship with them and what you've done to teach them like what you know and set them up for a bright future, because I think that's precious.
Yeah, right on. So I've got 3 kids. My son is 28. You met Devin. And then I've got a 26-year-old daughter and a 22-year-old daughter, almost 26. I guess she's 26 in 2 weeks or 2.5 weeks. But no, my kids are very close, so I'm proud of them. They're close to each other. We're a close family. I think we've done a great job there. My wife's done a great job there. But
It's a
you
team
know,
effort.
teaching finances, you can't rely on the school system to do it. It just doesn't. It's archaic the way that they teach today. It's the same it was when I went through school. I hated it. It wasn't applicable. It's less applicable today. They need to understand finances. They need to understand the basics of finances. Maybe it's not balancing a checkbook. Maybe that's a little outdated, but they should know to keep an eye on their finances, investments starting early, compound interest, long-term buckets versus short-term, more risky. Like all those things really should be taught in school, and it's not. And so just took the burden on ourselves to teach them these things. And one of those, because my entire life has been in real estate, and that's where I've been really successful, investing in real estate, owning real estate, and that type of thing. I wanted to get them involved in that very early. So I started building their credit with them when they were, 15, 16 years old, added them as additional card holders, made sure that I chose the banks that reported to their bureaus, as well as, because a lot of these banks, you can get an additional card holder on your account, but then it doesn't really benefit them because it doesn't report to their bureaus. So
How do you check that? Like,
you ask them,
okay,
you just ask them.
okay.
So I started building with that. When they turned 18, I helped them to expand on that, get a credit card from, a gas station, get a credit card from like Target, Kohl's, the easier department store ones. And then once you have those two lines of credit, then it's a lot easier to get that first car. And then once you get the first car and you have that third line of credit, it's really easy. Now you have 3 scores as well. You got your 3 lines of credit. It's really easy to have a good score to go buy a home. Now it doesn't mean that they qualify for the loan to buy their first home, but if you've got parents or somebody that's willing to co-sign, and they could be the occupant borrower and you be the non-occupant borrower, and you partner with them. So I didn't give it to them.
Yeah.
We partnered on their first homes, and you could get them into that. My son bought his first home. I think he was 20. No, sorry. He bought an investment home. He had a little bit of a settlement. He bought an investment home when he was 19, I think it was. Bought his primary residence at 22, and my one daughter bought her primary residence when she turned 18. And so, these are things that you can do as a parent to help guide your kids into learning that responsibility, learning the finances, and then get them into property as early as possible. The market doesn't matter. Just look historically. Go back 10 years, 20 years, 30 years. Real estate's going to continue to go up. You may think like, oh, it's going to crash and then never recover. No, it always does. And all you have to do is look at the S&P 500. Just, that's another thing. Sure, it might crash at some point, but look at historically what it's done. So even though you think like, oh my God, I can't believe these homes that are just, in Southern California or San Diego, let's say, 1,000 square feet, 3-bedroom, 2-bath home built in the 50s selling for $1.2 million. Like, it could never be any higher than that. Oh no, it will be. That house will be $2 million in 10 years or 15 years. So the sooner you get into real estate, the sooner you can build that equity over time. And it only matters, the equity portion of it only really matters if you go to sell the home.
Yeah.
If you teach them how to buy it, keep it, or roll it over into the next one for a bigger one, they're always going to have that as their safety net and their retirement fund. So that's just what we did, mainly because I'm comfortable with that. I'm comfortable in real estate. So it's a lot easier, but I think more people should have exposure to what is involved in doing that, and more guidance and confidence in helping the youth to get into real estate earlier in their lives. Because the average first-time homebuyer today, do you know what that is? Take a guess.
I'm guessing in their
Age.
30s.
33 years old.
Yeah.
Average age first-time homebuyer.
Yeah,
It doesn't have to be
I
that.
closed on my first property when I was 29.
Yep.
And and like knowing what I know now, and I think having gone through that experience, I feel like had I known about it and had I wanted it sooner, I would have been able to get it.
Yeah.
So, that was my earliest entry point, and that's where I'm at. But yeah, if I can do anything to like teach my nieces and nephews, to get in sooner on investing. It doesn't have to be real estate, but it's a safe place to park some money and to learn a lot. I would definitely want to let them know. So you mentioned you're raising capital this year. If anyone is listening, how could they get involved in doing that with HomePy?
Yeah, absolutely. Look, it's pretty easy to get a hold of me. All of my handles on all socials are at the at the Brad Rice.
Hmm.
And then homepy.com is HomePy's website. AmeriFund, AmeriFund.com is my mortgage site. If you go to AmeriFund.com, all my contact information is on there. I'm the CEO. Or LinkedIn. All my contact information is on LinkedIn as well. So yeah, it's pretty easy to find me. People don't have a problem finding me. Just send me a message. Email is great if you send me an email, but also DMs or, it's all fine.
Okay, great. Yeah, as they say in a Rich Summers group, rice, rice, baby.
That's right.
The last thing I want to touch on is your podcast.
Yeah.
So you just started your podcast, I think, what, like 2 months ago now?
I think it's been closer to 4 months now.
Oh my goodness.
Yeah.
Okay, time flies.
Yeah.
It's called The Blueprint. Tell us all about like the purpose behind it and what kind of content people can find.
Yeah, so obviously that's how you and I met. We both joined Rich's group, the Seven Figure Creator. Great group. Plug for him because he's an awesome dude and he's giving huge value to people that do want to start a podcast or build their socials. So that's how we met, and I went all in on it. So yeah, the podcast is going great. I got to tell you, like, it is really about the reps. Rich was the first one that I had on the podcast, and I'll tell you what, I would do a hell of a lot better job interviewing today than I did then.
I believe you, but I liked that episode because he sprinkles information about his life in his podcast.
Yep.
But it wasn't until your episode that I was like, oh, okay, like that's Rich's story. So I think you did great even from the get-go.
Thank you. Yeah. But I've gotten better at it. I've gotten better at kind of keeping the conversation going and asking the things that I think people would be really interested in. I love it. It's in person only. It's called The Blueprint with Brad Rice. You can find it on on YouTube. You can find it on every audio, wherever you listen to it from. But I don't even know what episode we're on. I think it's in the 20s. Gosh, I don't know. It's a whirlwind. I record one right after this. So it's like,
oh, okay.
It's, I'm pushing out one a week. It goes out every Thursday. And I actually really enjoy it. And I think podcasts are really great for building business and building relationships. Mm-hmm. And so although who knows if I'll ever be a giant podcast, certainly, maybe not a Joe Rogan or anything close to that.
I mean, why not?
Yeah, but it really doesn't matter. I know I know things take time, and I'm willing to put in that time. And I know it's about the reps. And if it takes 3 years, 5 years, I'm not impatient. Gary Vee says that all the time. Be patient, right? And It doesn't matter how old you are. I totally agree with that philosophy. And so, yeah, I'm enjoying it. It's been fun.
Yeah, I what I like about it is that you have your guests come on and give you the blueprint, right? Give you the ABCs of how they did whatever it is that they're an expert at. And you ask great questions about their lives. I think I've learned quite a bit about a few of the guests on there and just been impressed. So
Right.
I love the podcast, Brad. Keep it going.
Thank you.
And if anyone wanted, if specifically towards a young person who wants to find a way out, right, of whatever their current circle is via financial freedom, what would be your advice to that person?
Oh, good question. My advice today, I think, would be a lot different than it was just even a year ago. First of all, whatever you decide you're going to do, give it time. Don't give up quickly. The people that give up quickly are the ones that just never make it. So, for example, starting a podcast and doing it for 2 months and not seeing much traction and then stopping, that was a big waste of time. Just keep it going. Mm-hmm. But I think that the opportunity today for doing things online in social platforms like, and we'll see what happens if it sticks around, but like TikTok Shop, mm-hmm. It's extraordinary. There are a lot, with what I do, with what I've done my entire career, there's a lot of risk. There's a lot of things that are just not fun. Lawsuits and, employees and insurance and all these things that just really, honestly, they kind of suck. Mm-hmm. You have none of that running like a TikTok shop. You're not even touching product. You're just promoting it. I see and I know some youth that is just killing it. I'm talking about making hundreds of thousands a year and zero risk. And so I would say, take a look, see what you're comfortable with. Are you comfortable in front or behind the camera? Hook up, if you're better behind, hook up with somebody who's really good in front, partner up with them. Usually those skill sets don't transfer from one to the other. And just really take advantage of all the opportunity that's out there today using social media. That's what I would say.
Okay. That's great. Yeah. I mean, that's something that we could all benefit from, even if you're not young. So that's the age we live in right now.
That's right.
Awesome. Well, thank you so much again, Brad. And I guess we'll be in touch for the next one.
It is a pleasure. Thanks for having me on.
All right. Bye.